Futures are mixed this morning. The major indices are up better than 14% so far in 2021. This morning, we're looking at a mixed open. The Dow Industrials down 17, but the S&P 500 up 1.25, and the Nasdaq up 54. All three major indices closed at record highs yesterday, ahead of the start to the second quarter earnings season and the bank earnings we're going to hear from today. The Dow Industrials are up 126, the Nasdaq up 31, the S&P 500 up 15. We begin the new session in uncharted territory. Notable earnings this week include PepsiCo, Delta Airlines, JP Morgan, Goldman Sachs, and Bank of America, all out this week. And this morning during the show, we'll get JP Morgan and Goldman Sachs. We are also awaiting the Consumer Price Index that is out at 8:30 a.m. Eastern. We will get a check on inflation at the consumer level. Joining me right now is Kyriba senior strategist Wolfgang Koester. Also joining the conversation all morning long this morning is Payne Capital Management president and Payne's Point of Wealth podcast host, Ryan Payne, and pollster and the president of Maslansky and Partners. She is the author of Persuasion. Lee Carter is here as well. Great to see everybody this morning. Thank you so much for being here. Wolfgang, kicking it off with you. A big day as the start to earnings season. What are you expecting from the earnings period in the next month? And what do you think we'll hear from CEOs and managements this morning and all week about the second half of the year? Are you expecting good guidance?
I am in certain areas. As you know, what we do is we focus very heavily on currency volatility and how that impacts earnings. And then we're also watching the acceleration of the central bank digital currencies and how that is evolving into the monetary system. But when you bring that down into stocks like JP Morgan and Goldman Sachs, we expect them to have very good numbers because we had high volatility, higher than in usual volatility in the currencies. And that's actually typically is an area where banks profit. Bank of America doing a really good job in this, expect good numbers out of them. The PepsiCos, and when we look at these corporates, we look at things like how well are they actually managing their currency risk. PepsiCo has historically done a very good job, so we do not expect a negative surprise, but you will see quite a few U.S. companies who will have negative surprises coming due to the volatility. But PepsiCo is not one of them. We expect them to hit their earnings per share without surprise.
Yeah, in fact, PepsiCo earnings are out. They are better than expected on both the earnings and on the revenue side. They're also raising their guidance on $19.25 billion in revenue for the quarter, Wolfgang. In terms of the currency impact in the second quarter, was it significant from your standpoint on the S&P 500?
Yes, it was actually. You have seen a lot of headwinds already in the past quarter that we've seen with losers, not only in the United States, but also in Europe, such as the Volvos and the Curtiss Wrights of the world. But then you've seen some companies that have not been very impacted, and we call those the winners. If you're making money in these markets, we don't actually consider that to be a winner because that means next quarter could be the loser. So from a winner's point of view, we really look for companies who are have very little impact and are what we consider currency agnostic. So Pepsi has been just coming out with it, not having been impacted. Having a better quarter is not a surprise to us at all.
Yeah, I mean, PepsiCo shares are already up 1 2/3% on the better than expected numbers, Wolfgang. But what I'm trying to understand from you is the macro story. I'm going to zero in on the currency impact in a moment, and I definitely want to get your thoughts on the digital currency plans and what you see how that changes things. But broadly speaking, we're getting the CPI number out later this morning. We will get a check on inflation at the consumer level. We're expecting economic growth for the second half of the year. What does the macro backdrop story look like to you?
So what it looks like to us is that we think that inflation is going to keep going and we're going to have some serious heat in the economy and growth, which is actually quite positive as long as it doesn't start getting overheated. So I think that actually you've got pinned up demand, you're going to have it. I think that you're going to see a lot of companies coming out very well, looking better. Not sure that a Delta, for example, is impacted as much yet, but you certainly will continue to see even in that area some positive. Overall, we're very positive on this, but we have to be careful about the companies who are not managing that currency risk because we did have the volatility and you will have negative surprises that will hurt those companies. And what we look for is that That also being an indicator how they generally manage their financial risk going beyond currencies. Just currency is just a hard number that comes out. It's in their balance sheets. It's in their income statements. It impacts earnings per share. So we look at that as a very solid indicator about how good they actually manage their currency risk.
Yeah, so which companies are impacted the most, do you think, by this volatility in terms of currency? What are you looking at or expecting?
Yeah, so what's interesting here, this is actually industry agnostic. It is really about, the S&P 500 on average do 50% of their business abroad. So from that perspective, whether you're in one industry versus the other, it really doesn't matter too much when it comes to currencies alone. So what you then have to do is how they actually manage it and how they have historically managed it. So in volatile times, when you have a stronger dollar, that's typically negative for U.S. S&P 500 companies who don't manage it properly and who are not currency agnostic. So we follow all these companies and then look at which one actually can go through what otherwise would be negative areas of a strong dollar, which is impacting them negatively. The reason it seems a little bit counterintuitive to people because you think a stronger dollar means, hey, that's doing better. But in reality, that means that the income, the revenues that they're getting from other countries are worth less. And that's why it's a negative impact unless managed properly.
And of course, we've been watching a strong dollar. Wolfgang, it's great to get your take on all of this. Thanks very much. We will keep watching. Wolfgang Koester joining us this morning on the markets and